China and Canada both announced retaliatory measures. Mexico's president is saying this morning that the country will respond as well to Trump's tariffs, with details to come on Sunday. Retailers adding to worries this morning, Target predicting that tariffs are going to pressure first quarter profit. Best Buy issuing a muted annual sales forecast after warning earlier that tariffs would force electronics retailer to potentially hike prices. Joining us now with more on what Trump's tariffs could mean for Wall Street, we want to bring in Steve Rattner. He's Willett Advisors chairman and CEO. Steve, it's great to talk to you. So let's talk about the disruption that we're seeing play out in the markets right now. Clearly taking a look at the major averages lower here once again today. Maddie was just talking about the fact that one of the critical levels to watch here is a reversal back to the levels that we haven't seen since Election Day. I guess, to what extent do you expect to see some of that disruption play out in the market?
Well, we're seeing it play out in real time. Look, this is not a theoretical discussion anymore. For the last several months, we've had this theoretical debate between economists and people like me who basically think that tariffs are essentially bad for the economy ultimately in the long run because of the deglobalization, raising costs and so forth. And now that the president's actually imposed them, the markets are speaking. And so no longer can the president say, well, all you economists are all just crazy. This is the right thing to do. You've now got investors, a whole variety of thousands of investors all voting with their pocketbooks and saying this is bad for business, bad for the economy, and ultimately bad for consumers.
Yeah, Steve, I know that you speak with a lot of business leaders. In your most recent op-ed, you talked about how those leaders were shrugging off tariff threats. Now that we have the tariffs, they're saying, okay, well, it's not really going to last long, so don't freak out too much. What is it going to take for executives to believe in the Trump administration's tariff agenda?
This may well do it. As I did write in that piece, and as executives were saying to me as I did my reporting and fact gathering, they simply didn't think that ultimately these tariffs would stay in place. And of course, maybe they won't. Maybe Mexico and China will come rushing to the White House and do a deal with Trump, one of his famous deals. We'll see. But yeah, certainly the fact that they're actually going into effect has to have some impact on business leaders and their belief that the Trump administration is simply prepared to drive the economy off the rails if necessary for whatever bizarre reason Trump has of the sort of 19th century mercantilism.
Steve, how quickly will we start seeing this reflected in the economic data? When we talk about the risk here of this weakening U.S. economic growth, clearly that is becoming more and more of a concern here for investors. We're seeing that reflected in some of the most recent sentiment data that we are getting. So I guess how quickly will that then filter through?
Well, the sentiment and some of the other numbers that have come out have already filtered into the Atlanta Fed's GDP Now figure, which I'm sure you've reported on, that essentially, instead of showing modest growth in the first quarter, now shows an actual contraction in the first quarter. I would caution the Atlanta GDP Now numbers are a bit squirrely. I'm not sure they're the best predictor of events that actually haven't even yet happened. We haven't even finished the first quarter yet, but it is certainly a worrisome sign. You mentioned a minute ago the decline in Treasury yields. And I know that obviously we all want interest rates to be lower rather than higher, but Treasury yields are not coming down because people are more confident about inflation coming down. They're coming down because they're more worried about economic growth coming down. And so that's also a worrisome sign, regardless of what the Treasury Secretary may say. So look, the economy is in the later stages of a pretty substantial expansion recovery since COVID. And these things get long in the tooth on their own, but what's going on in Washington is not helping things. And so I think you're going to see fairly weak economic data over the next period of time.
Steve, how unfriendly is the environment right now to businesses? And then I guess when we talk about the global implications or ripple effects of that, how do you see this playing out?
Well, it depends what you mean by unfriendly to business. I think one of the things that business, as I mentioned in my op-ed piece, is certainly looking for from the Trump administration, has gotten, is a much more business, in general, a much more business-friendly approach to particularly to regulation. Taxes are essentially set for business, so it's really about the regulatory environment. Obviously, the tariff thing cuts the other way. That is something business doesn't like. But most of the rest of what the business community has been hearing from the Trump administration, it actually likes. And so it's going to be a question of whether the bad parts of this outweigh the good parts of what business is getting. is getting.
To what extent are you hearing executives say they're putting expensive decisions on hold while they wait for policy clarity?
I can't say I know I've heard that much of that. Big capital projects take a long time to both formulate and then to implement. And you've seen in recent days things like the TSMC announcement of the investment in the US. You've seen Honda say that they're going to bring some car production back to Indiana from Mexico. So I think business is continuing to go about its business, so to speak. Although I'm sure there are people who are waiting now that this is actually happening to see how it all plays out.
Steve, is President Trump losing the confidence of CEOs? Did you get that sense through your reporting?
Yeah, look, this is a very fast-moving story, as we say in the journalism business. And what I was hearing a week, 2 weeks, 3 weeks, a month, consistently since the Trump administration took office, it's hard to say today, after what's happened in the past week, that business still thinks exactly what I said that they thought. I do think business people care about things besides their own business. And therefore, what is happening in Ukraine, I know, is deeply disturbing to many of my business friends. The tariff thing is certainly a big factor. And it's just a question of when the bad starts to outweigh the good. As I said in my piece, the animating force behind the business community's support behind the Trump administration was, to a considerable extent, its antipathy toward the Biden administration, which it really restrained itself from talking about while Biden and Harris were still in power, because they might have stayed in power had they won the election. Now that they're not in power anymore, they're much more open to saying that. And so as far as the Trump administration is concerned, we're just going to have to see, as I said, how long it takes for either the bad to outweigh the good, or for business to get comfortable that the good is going to outweigh the bad.
I wonder, too, how much the people you speak with are weighing the Fed versus the Trump administration, and who will blink first when it comes to the market's negative reaction to the totality of policy, both fiscal and monetary. What are you hearing on that?
I think people want the Fed to keep doing what it's doing. I think there's, even though Jerome Powell's tenure has not been perfect, he did add to the inflation post-COVID. And he did have to cut interest rates after raising them in 2019. He's really he's done a very thoughtful, pragmatic, data-driven job on balance. And so I think there's a lot of confidence in the business community about him. And I don't think the business community is looking for him to rush out and cut rates when inflation is still at 3%. He's made a commitment to get it to 2%. And I think the Fed would lose a lot of credibility if he started cutting rates right now on these signs of economic weakening. So I don't think the business community wants or expects him to start cutting rates now. I think they expect him to finish the job of getting inflation back to 2%. And then hopefully there'll be some scope to cut rates.
All right, Steve, we got to leave it there. Thank you so much for joining us. We appreciate it.
Thank you.